Hey gang, Matt from Easy Breakouts, about to start another current market trend review, but before I do, just wanted to mention that if you find this video helpful, be sure to click on that subscribe button down below. Also, you can view additional videos by visiting our YouTube channel. Alright, let's hop into our analysis. So folks, across the board, nice bid coming into equities, and here's the deal. All-time highs on all four major indices, Dow, S&P, NASDAQ, Russell, all hitting new all-time highs. Folks, we had a pop in the crude that definitely helped out the S&P and Dow type names. Bonds kind of marking time in the crude, or I should say the gold rather, also kind of balancing out on lows, but that pop in the crude definitely providing a nice little bit into the equities. We'll see all of this on the charts, but as always, we're going to start off with the S&P 500. So folks, prior highs on the S&P 500s were 2193.81. Today we closed out the day at 2198.18. So again, we were talking about on Friday like a little bit of rejection, it was options expiry, and we kind of just backed off of those highs there on Friday. Well, today, Monday, we came back strong. We had a nice little gap in the morning, and we continued to build upon that gap during the day. We had a couple of stocks breaking out, and other stocks that we actually have had on a swing trade for the last 4 or 5 days actually stopped us out finally. So folks, as we're noticing stocks at new, or I should say indexes or indices at new highs, what you really need to just watch for are new opportunities in stocks, right? So you take a stock, it's breaking out in high volume out of a recognizable chart pattern. You follow your swing trading rules on that. You scale out, you take profits, and you finally get stopped out a few days later. You rinse, repeat as the market continues to show that it is strong. You continue to take a lot of these breakout setups. So that's all we've been seeing in our trading room. Again, as I've been mentioning, one of the things that we've been seeing a lot of is, double bottoms here. And I think it's predicated on the S&P and the NASDAQ forming some double bottoms right in here, right? NASDAQ forming a bit of a double bottom. This also hitting new all-time highs. So we've seen a lot of double bottoms across the board, but also if you look at like the Dow Jones here, let me see if I can pull up a ticker, DJIA, what you'll see is a lot of high handles as well. And that's also, I think, because of the Russell and the Dow here forming very strong run-ups. If you take a look at a lot of like the XLF type names, you'll see a lot of these high handles forming forming up, I should say. If you look at like the infrastructure plays like the Caterpillar, right? These high handles that are forming up across the board. So folks, as you take a look at stock setups, what you really should be focusing in on, I think the two basing patterns are double bottoms, I should say, and high handles. Those are going to be the two probably most predominant chart patterns that you'll see out there. And it's kind of just based upon what we're noticing here on the S&P and the NASDAQ and how they've kind of formed up over the past several months. Now, another thing I did notice today is that tech did take leadership again. We talked about over the last few weeks after the election, tech definitely had a bit of a sell-off, but today leading the way higher. A lot of these tech names bouncing off 200-day moving averages, talking about the likes of Facebook, Amazon, Apple, all of them higher today, taking charge. And so across the board, what we saw is that NASDAQ was leading higher all day. In fact, the Russell did suffer a little bit of like a midday sell-off. I don't know if it was a little bit of profit taking. We did recover, but here it is. Midday sell-off, or I should say early morning sell-off. And in fact, a lot of our indices here, if you take a look at like the Qs here, we did take notice of that, but you can see here how the Qs kind of righted the ship, did not make new lows on the day, did not undercut yesterday's or Friday's lows, kind of righted the ship, did not get a full gap fill, came all the way back up and closed the day out strong. Whereas the Russell here, you can see that came all the way back into range from Friday, kind of closed mid-range trade. So I don't know if this is a little bit of profit taking going on in the Russell, but we definitely saw the return of leadership in the NASDAQ. And like I said, I think if you get all four of the majors here up into new high grounds, a lot of stocks are going to start to take notice. You're going to have breakouts left and right. And that's what we've been seeing here over the last couple of days and today as well, some more breakouts happening. So folks, as we move over to some of our external markets, taking a look at the crude here, I had mentioned on the crude that I thought if we got above the 47s, we might have a chance to rip higher. And let me show you why. So we had that bit of a sell-off down to the 43s. We tagged the 43s. That was a place that we were looking at for a little bit of support, a little bit of an undercut before rallying back higher. Then we kind of came into these 46s, and I looked at the 46s as a place of prior highs, and a bit of congestion might form here. Now, the reason why on yesterday's video I was looking at the 47s, is take a look at how this formed up here. So we did rally higher up to the 47s, got denied, came back down, but you see how you started to form this Friday evening, and then coming into Sunday morning here, our Sunday afternoon trade, you started to form kind of like this cup and a handle on a 5-minute chart. And it looked like right above the 47s, if you broke out, you might get some traction to the upside. So again, these chart patterns, they form because buyers and sellers are transacting at certain prices, and they form these chart patterns over time. And it's our job as traders to identify these chart patterns and look for trade setups and trade locations. 47s was kind of the place I was looking for on the crude. We broke out, that ripped higher here up to the 48.50s. Let's zoom out here and take a look at the bonds. Bonds kind of just sideways action here today. Not a whole lot we can glean other than, there's been a big sell-off in bonds, means a big rip higher in the 10-year yields, 30-year yields. And then finally here, taking a look at the gold. We also called for the gold a test down to the 1200s if the 1250s did not hold. Same thing happened here, right? So we saw that no buyers showed up at the 1250s, and we're looking at 1200s as the next logical area. And we tagged that just a few days ago, hitting 1201s here. At this point in time, it's hard to get any sort of additional gauge or feel on the gold contract. I think you just need to have some more trading action before we can start making any sort of calls on potential areas for a rally or a further sell-off to continue. But again, on the gold, we've called that pretty nicely here. We've been watching how buyers and sellers have formed up on the charts, and I think we just need more sideways time. As far as some of the individual equities we're looking at today, folks, nice pops here. Let me see if I can pull up some individual equities. One of them was a prior daily stock picks, ANET. This is one that we've been focusing in on. This was on our daily stock picks back here. Nice little pop there. In fact, we actually took another trade here in this EL left. This formed a high handle right in here, and you can see on the 5-minute charts, it actually kind of ripped up here and formed this nice little flat base or high handle on a 5-minute chart too, before breaking out up and over the 30 evens, ripping up to the 31 evens. That was a nice little dollar move within about 15, 20 minutes or so on this ELF. And then finally, just taking a look across the board, I did notice some oil and gas names were starting to set up, like this XOG. This actually broke out. This is an IPO base, broke out today. Another high flyer here, REN. That broke out to new highs as well. So again, folks, as we cover individual equity names, I have to make the disclaimer that these are not buy, sell, or hold recommendations on these particular stocks. What I'm trying to point out here is how the stocks that have the high relative strength and that we've been noticing has had high relative strength are the ones that are continuing to break out. The stocks that have been nearest to 52-week highs continue to post new 52-week highs down the road. So as we've mentioned before, again, the market looks fairly good. If we start to see the market start to undercut some of these prior highs that we've just posted here, I think that potentially that could be a warning sign. We have run quite a bit, but as I look across the board, there's a lot of bases, a lot of high volume structures, and that tends to point to a market that's under accumulation. We'll have to see if that continues throughout the rest of the year, if we have this Santa Claus rally here throughout the rest of the year. But as always, folks, just focus on the charts. Remove all of the noise, remove the media, remove all of the blogs and the forums. Just focus in on the charts, focus in on price and volume. And again, game plan always has been, always will be focusing in on best relative strength stocks, breaking out on volume from recognizable chart patterns. Other than that, hoping you all have a great trading day ahead, and join us for tomorrow's market trend review. Hey, by the way, if you haven't done so already and you're liking the analysis, go ahead and hit that subscribe button down below. And as a reminder, you can also view additional videos by visiting our YouTube channel. Or if you'd like to find out more about Easy Breakouts, go ahead and click that Show More right above the comments section to find out more about Easy Breakouts. But other than that, have a great trading day ahead, and may the trend be with you. Take care, everyone.